Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Welcome, Art Jarvis.
How we doing?
2 weeks have passed, so it's good to be back.
Yeah, lots happened in 2 weeks.
Well, you know what? First and foremost, you're right. So Taking Stock, episode number 39, begins right now. You know, like the TV, they say, starts right now.
That's right.
So episode 39 starts right now. But we would be remiss if we didn't start with a lot has happened in the last 2 weeks, beginning at your own home.
Yeah.
So you sent your daughter packing, got her married off, and sent her out.
Yes. I'm not sure that's how it gets described, but yeah, that's basically what happened, though.
No, and I can say myself, and thank you so much to Caitlin for including Sue and I in the wedding celebration. So we were there for that, and I have to tell you, it was a beautiful wedding.
Yeah, thank you.
It was
Appreciate
a lot of fun.
The kids are happy. Check.
Yeah.
I will say, that there's a number of people that come together to make a wedding function, right?
Hope so.
And all that. And I have to tell you, I don't have a complaint about any of them. They all. I was impressed. They did their things. They did it professionally. They did what they said they were going to do, when they said they were going to do it, for how much they said they were going to do it.
Well,
which
that's
is unheard
key.
of.
I was going to say that's the key. We're going to do this, and this is what it's going to cost you.
Yeah.
And then it actually does. Yeah, that's pretty good.
Yeah,
that's pretty good.
No, I'm glad you enjoyed it. Glad you were there to celebrate with us. It was a great night. And very, very happy period, and we got a great new son-in-law, and it's good stuff. Just a little shake up in the Jarvis family tree.
And now the countdown for Austin.
Yeah. So that's what.
So you got a 5-minute break, and then you get to start.
10 or 11 months. I'm going to go with maybe that one's slightly easier, but I'll let you know.
Well, you're the father of the groom this time, so that's on the other family. They gotta do the whole get their daughter married thing.
Yeah. There's a few stories there, but it doesn't fall under taking stock. So we'll.
Okay, we'll let that go. Well, hey, listen, last note on the wedding. So, did you have a good time?
You know what? I had an absolute blast. I was very pleased. I was very happy. But, I'm getting older, and, we had stuff going on Thursday, we had stuff going on Friday, and we were all day Saturday, and old man Art hit a wall about 9:30 on wedding night, and, so I pushed through. I was
going to say you were still going.
Yeah, I think my head finally hit the pillow about 2:30 in the morning is when it was finally all said and done. So,
I hear the snoring.
But you're running on excitement. You're running. There's a lot of good stuff going on. People
the adrenaline's flowing.
Yeah, exactly. Yeah. There you go. So no.
And now, as far as I know, there was only one glitch, and of course that was my food. But
yeah, I know. Well, yeah.
No, and that, you know what? All kidding aside. That wasn't a glitch. Everything was fine, but it was funny on the the nameplates got switched. So apparently I'm Stephanie.
Oh yeah.
So without naming names all the way, I'm Stephanie, and Stephanie's Chuck.
Yeah.
And Stephanie's husband is either very happy or very upset because he's married to Chuck. So that's a problem. But
depends on what direction you're looking at.
That's exactly what I said to him. That was even.
I would say that most people would say the only thing wrong with the wedding is some guy getting up and talking for half an hour. So
I don't know what you're referring to.
I
know it wasn't me.
Yeah,
I didn't talk.
Yeah. Good. Well, if that's the only snap.
Nobody said that. Nobody said that.
That's because people are too kind. Anyway, at least the ones I'm hanging around. Anyway.
I already told you, it was a beautiful wedding. It was a lot of fun. I mean this in the most sincere good way. It was very different. as you well know, there were some different things compared to your every Saturday night wedding or whatever it is. But
you got the required stuff in there, but then we also had a little fun with it.
Yeah.
They had a little fun with it, so
they did.
It was good. It was you know what you want to get the wedding done, but you want it to be something you enjoy, and I think that was a big thing, honestly, for those two. And we're getting off on a tangent here, but for the two of them, they wanted it to be personal.
It was
okay, so
that was
well,
and it touched. And the very last thing we'll move to because I know you want to tell me some of the stuff that we're here to talk about. Taking stock, we want to take stock. But taking stock of that wedding, obviously Jim and Caitlin have a traveling bond, and the travel theme and how they implemented that into the wedding they did that very well. So let them know if I didn't.
I'm sure you won't be shocked. I had nothing to do with it, and I had something to do with it. But
somebody picked.
No, it did. They. Kim and Caitlin and her friends and Jim, they did a good job of putting a personal touch on it.
It was very well done. It was very creative, and it was a lot of fun. And that's enough of that. So what is new in the? Let's take stock of the marketplace now and the economy. Yeah. So what we were talking offline before we started, and you were telling me something. I want you to tell the listeners if they haven't already picked up on this themselves. What's
been going on for the last 3 weeks has now become known as the Trump rally, and that is included in stocks. That's included in cryptocurrency and things like that. It's as we sit here today, Tuesday, November 26th.
Okay.
Correct.
Absolutely correct.
We're sitting the S&P 500 is actually just slightly above 6,000. So we have gone a long way in a very short period of time. Since you got Bitcoin that has basically gone from roughly 60 or 70,000. It banged up against. Hit 99,500 last week, if I remember correctly. So it just almost hit that 100,000. That's the Bitcoin. Yeah. And that Trump and the people that he's bringing into the office and things like that. They're that's how they explain how well Bitcoin is doing. That the things that's going on and going to be happening starting next year is going to be positive for certain things. So we've come a long way, but. There's certain headwinds that may have been associated with the other party winning, and that those headwinds are alleviated, if not mostly, taken care of. Because I don't think we'll have to worry as much about taxes and things like that as we might have had to. That there's a tax package that's been in place, and it was going to expire next year in 2025. And I'd say the odds are probably pretty good that we'll see some kind of extension or renewal of that. So that's positive from earnings standpoint. So it's been going well. I mean, for us to go from basically about 5,500 on the S&P to 6,000 on the S&P in 3 weeks, right? 3 weeks. So that's a big move. Now.
Yeah, from November 5th to November 26th is 21 days.
There you go.
So,
that math is hard, but
hey, you're the math guy. I'm the word guy. I don't know what happened there.
But we talked about it last episode, which was right after, after the election, and the markets were surprised by Trump's win.
Right.
Okay. So, and
that explained the sudden leap in the 24 hours following the election results.
Sure.
And as you said, we spoke about that. We talked about that a little bit at length, even in episode 38 2 weeks ago, right after the election. You're touching already, Art, on like the key question today is, okay, now we're 2 weeks later, and we've seen and heard the announcement of the cabinet members, the cabinet nominees, and these people who have to be confirmed yet. Some, there's already been a controversy over one in particular who withdrew his name.
Right.
But you've already touched on the fact, what's the impact as we're learning more and more about what this next 4-year Trump administration is going to look like. And you're saying, things are going well. And they're calling these 3 weeks the Trump rally. So how about that?
Yeah, I know you're exactly right. But, I mean, here's the thing. We're having a Trump rally because of what we think is going to look going forward. There's certain things. And he just, was it yesterday or day before, he nominated Scott, Bessent.
Right.
I think is how you say his name. So, he's a $1 billion hedge fund manager. Trump, Trump's Trump. Let's be clear about that. But, he says stuff, and, I would assume that in some ways he's looking at it from a negotiation standpoint. So when he comes out yesterday and says, we're gonna slap China and Canada and Mexico with 25% tariffs and things like that, that's a big bold statement. Okay, 25%, that's a substantial number. But he brings in a guy like Scott Bessent, and he tends to agree with Trump, but I think he comes at it from a much more softer standpoint, and that yes, there will probably be tariffs, and there will be tariffs on certain goods, but it's not necessarily going to be 25%, right? I mean,
well, and let's talk about tariffs for a minute, because in these past 2 weeks, the past 3 weeks, so in the immediate aftermath of Trump's election, and there's the critics, and then of course there's the supporters, and then there's the economists, and they're talking. I thought we were going to get a break and not have to talk about inflation. You knew inflation was going to come up, but I was stunned to hear, some economists or economic experts, so-called economic experts, on some of the news shows and some of the discussions since Trump's election, talking about, Trump's strategies are going to cause inflation.
Yeah.
So this is why I said let's talk about tariffs, because that was what they said. His tariffs are going to cause inflation to rise because, and obviously the logic is, you put tariffs on goods, thus those goods are going to cost us more. And so that's rising prices, that's rising inflation. What do you say to why that won't be true?
Because it historically has not been true. So if you look at the last time that Trump was in office, same thing, slapped tariffs on things, and it was the same arguments last time. The same arguments last time was that was going to cause inflation to go up. It didn't happen.
Right.
Matter of fact, we're sitting at whatever, we're 2.6% inflation right now. It actually got down below 2%. While he was in office, and with the tariffs and things like that. But here, my smart aleck comment is I don't know if you know it or not, but if you take all the economists in the world and line them up head to foot around the world, they won't reach a conclusion. So there's number one. Okay, so take that.
Time out for the TS.
That's right.
The TS39 comedy hour.
Do with that what you want. Okay.
Right.
But so there's two sides of the argument, and it's interesting where the arguments come from. But the proof's in the pudding. Again, I'm a numbers guy, right?
Sure.
So there were tariffs, but there was not an increase in inflation associated with that. So I disagree.
Well, and there you go. And this is your bailiwick. And it's not mine. And so in my mind, though, when I heard that, I thought, well, Trump did that his first term. Sure. And we didn't have inflation.
Right.
We had inflation, critical rising inflation in the last 4 years. On that note, I think you and I have talked about this, and I've certainly talked to my wife, Sue, multiple times, said, what I'd like to see, because she tracks everything.
Okay, good.
She does. She tracks everything, in our household, expenses, expenditures. And full well, she takes care of the groceries.
Yes.
Taking stock episodes, every single one of those episodes is a grocery day when we're here in Studio A.
Yeah, she gets to run and hide from us.
She leaves the building. She goes, it's grocery day. But so my point is this. She tracks all that stuff, and I've been saying to her for months now, before the election happened, and I never really
pursued it all the way to the end until after the election. But I finally did say, you know what, I really do want to see what our groceries have looked like compared to,
Sure.
let's say compared to Trump. So the last year of Trump's first administration, and this sounds like I'm supporting Trump. You can take it for whatever you want, but it's just a comparison because of the inflation and because we've talked about it so much, and the rising prices and where it hits home. I don't care about the economists. I don't care about Powell in that respect. I want to know what happened in my pocketbook.
Sure. Right.
And on my bank account, and in my refrigerator and freezer, and on my dinner table, and in my closet with my clothes and all that stuff. The roof over my head is what matters. And that's what matters to people who are listening to these episodes. So I said, Sue, what the heck did it look out? So she finally sent me the spreadsheet.
She sent you a spreadsheet.
She sent me the spreadsheet, which that's what she tracks it on. So it's a spreadsheet. So she finally she said, hey, I sent you some emails today, a number of things, but including that. I said, okay, I just want to see the grocery one. The other ones, are for your purposes. That's fine. 2023 was a 30% increase.
Sure.
In our groceries.
Sure.
Compared to 2019.
Right.
The last, 2020 even. But compared to 2019, a 30% increase over 2019, 2020.
Easily. And that's just your groceries.
And each of the years, 2022 was an increase over the last Trump year. 2021 was an increase in expense over the last year of Trump, and 2020. But
yeah.
So 21, 22, 23, the 3 years of the Obama administration and of rising inflation, and it's real. I mean, you can listen to it and you can say it was whatever it was. We can talk about it. You can listen to all the people talk about it.
Yeah. Biden administration.
Right. What did I say?
Obama.
Oops. No, correct. Biden administration.
Right.
I can't believe I said that, but has nothing to do with Barack Obama. But the Joe Biden administration for those 4 years. So 21, 22, 23, 24 final numbers aren't in yet. But, she showed me through October,
right.
our grocery expenses. November's not a final number yet, obviously. But the bottom line was 30% increase.
Not surprising at all.
In the cost of groceries at my house. That's a real number. And other people, I'm sure, and I know other people, you got to pay attention to your family budget. Unlike the federal budget.
Or have a family budget. That's always a plus.
Yeah. So
it's always interesting that, running a government is not really that much different than running a house. There's just a lot more moving parts. Yeah. You still make decisions the same way, in my opinion. But here's the thing. 2020, I'm a little bit softer about things. 2020 was just a mess, right? I mean, trying to figure things out, trying to make decisions. People maybe trying to make decisions for the right reasons, maybe for the wrong reasons. There's a whole lot going on there, and in the the pumping money into the economy, I think that would be viewed favorably in the future. But I'll say it again, and just to beat a dead horse, is the Federal Reserve did not do their job in 21, 22. Just did not do their job. And again, would our grocery bills be higher? Yes, they're going to be higher. And will our gas be? Yes. And these things, yeah. Will they go up? Yes. But should they have gone up 30%? Or insurance and real estate taxes and all that stuff, should that have gone up 40% and things like that? No. There's somewhere between what actually happened and what should have happened, right? And we're paying for that. There's people suffering because of that. There's no doubt about it. You look at we were doing stuff with Life Food Pantry and things. There are people that are being forced to make very specific decisions right now because their rent's gone up, their food costs has gone up, their transportation costs have gone up, medical insurance, it's all gone up, and it's gone up a big number. If someone raises our rent a couple $100 a month, we're not happy about it. Is you raise someone else's rent a couple $100 a month, it's a difference maker. right? I mean,
Right.
things are already tight. So, yeah, I'm a little bit up on my soapbox again, but I mean, it's just what we went through in the last. I believe what we went through in the last few years was unnecessary. Okay, I think there's freshmen sitting in UC in an economics class that can tell you that if you pump that much money into the economy, better be ready to fight inflation and fight it before it shows the whites of its eyes. You need to battle it before you see it. Once you see it, it's already too late. So again, that 2020, and then that mess, 2020 messed with, geez, oh Pete, the transfer of goods and services back and forth and all that. I'm just completely escaping my mind at the moment. And that's just now. It's still not back to normal, right? The inventories and things like that's still not back to normal. Okay, and we've learned a few things around the world, so hopefully we're a little bit better at it, which helps.
I was going to give you that word, for the transportation of goods and
yeah, please do. What am I?
Yeah, except for I went blank on it right when you said that too. It's like if you hadn't said anything, I was going to tell you, but then you said whatever that is, and I went like, yeah, what is that?
That's ridiculous. That I'm sitting here, I can't think of it.
Anyway, that's okay.
But anyway, so that's a long-winded way of saying, it's we're at a place that I don't believe we should be at, but that what? Guess what? We're here.
All we know is that transportation of goods, not services, but the transportation of goods was stalling out at sea. That's what we're talking about.
Yeah, pretty much.
Hey, moving forward and getting you off of your soapbox for a minute. Not that we need to do that, but shifting gears back to the Trump rally in the last 3 weeks, and the S&P from basically the 5,500 to over 6,000. Mm-hmm. A famous Art Jarvis saying, too far, too fast?
Yeah, we're a little bit out over. I have a client that says it this way. We're a little bit out over our skis a little bit.
Right.
We need to back up a little bit. So, but nothing like I'm not sitting here saying we need a nice 5 to 10%, drop either. I think things are looking better. 12 to 18 months out, we're starting to price some of that into the market. We don't want to get too far ahead of ourselves because let's be clear. We're placing bets on things that we believe are going to happen, right? So and there's your market for you. But yeah, it's and corporate earnings are going up. Interest rates have come down a little bit. It's interesting that we were at several months ago we were at 3.75% on the 10-year Treasury. Next thing you know, we're back up to 4.5%, and now we're back down basically to 4.25%. So, and inside there, we've had 0.75%. 0.5% and 0.25% rate decrease since that time, but yet interest rates have moved up. But from here to 3 weeks ago, corporate earnings have moved up. The economic numbers still look good. The interest rates have moved down. That all is helpful if you're trying to come up with a higher valuation for a year from now.
Well, in between now and 2 weeks ago, when we were talking about the Fed Chairman Powell, and the fact that, much to our chagrin, dropped the interest rates again. But he's the one that's saying no to dropping the interest rates again. So I found that interesting in the last 2 weeks. Tell me about this, because I don't know. It shocked me to hear this because I'm just not in tune to it, more so now because of obviously working with you on these Taking Stock episodes. So I heard, all the governors gave speeches. Is that so that's a common thing that they all give speeches?
All the Fed governors? Yeah.
Yeah.
They usually chime in and give their 2 cents.
It's all
and
the
things
Fed,
like that.
Fed board.
It's all in writing, number one. They all write their own
Here's
research. What I think and why I think it,
Yeah.
right? Yeah, it's interesting. It's not like they're all in lockstep with each other right now.
Clearly.
Right? They're not, some want more cuts. Others don't want any cuts. And I'm closer to the we don't need cuts right now.
Right.
But
and again, following that last cut, where you and I sat here and recorded, episode 38, and brought the hammer down on Powell a little bit, and it was due. It was fair and just to bring the hammer down on that last decrease. It would seem. certainly from the viewpoint of our discussion. But again, in the 2 weeks after that, then he's like, no more cuts.
Yeah.
So, good. Maybe he's righting his ship a little bit.
Yeah.
Or seeing the writing on the wall with a new administration that's not going to let him.
Yeah, but politics has nothing to do with the Fed, though,
Absolutely
right?
not.
But, oh, geez, okay, here we are
sorry.
again. No, it's just, he has every bit of information that there is to have, right? There's 100 inflation indicators out there. I'm not going to look at 100 inflation indicators. He has them at his disposal, though. He has his personal consumption expenditure inflation indicator.
Personal consumption inflation indicator.
Expenditure.
I wanted to say that more. Expenditure. I forgot that. Personal consumption expenditure inflation indicator.
Yeah. So the PCE.
The PCE.
So he's got that.
Consumption.
They like that one. So
that's our favorite one. That I can never remember what PCE stands for, but personal consumption expenditure. Write that down, folks, on your notes.
Keep an eye out for it. But so he has a lot of information, but we're trying to negotiate a soft landing. We talked about that last time. Okay, we're trying to negotiate. We want to bring this economy down to a very soft touchdown. And then just if we can just keep it steady and grow the economy at whatever it is, 2.5% to 3.5%, we can keep interest rates lower, keep inflation lower. Then they did their job from negotiating the soft landing, but did not do their job in between. Anyway.
How about now let's go off track for just a second.
Okay.
And we're running out of time, but I just have to throw this in. Speaking of soft landing, so there was a launch.
Yeah.
Right? You're aware of that. So the Elon Musk SpaceX.
SpaceX.
Yeah, I just went blank there for a second. But this Elon Musk SpaceX rocket launch last week, and you just reminded me because it's all about that. They got those hands that gently bring back the booster rockets so that they're reusable.
Yeah.
However, it didn't work.
Yeah, it's
last time. Worked the time before, but not this past one.
I'm sure people might disagree with me. Elon Musk is a very smart person. He is very well educated. He's very well read. The only difference between him and a lot of people is twofold. One, he takes his ideas and runs with them, and is not afraid to fail, which is a good quality. And he's got a whole bunch of billions of dollars behind him, so he can do what he wants.
I was going to say, I thought that was one, and the go and run with him is the two. But I'm with you.
I'm not even sure what that. Yeah.
One allows him to do two.
Yeah, and you can
because in reverse order of what you stated. But
and if you're providing the money, you can do it your way. So
all of this conversation and talking about the Trump rally of the last 3 weeks. How do you sum it up for our listeners today? What's the important things that you're seeing, and the numbers are talking to you, Art Jarvis?
Yeah, we still look good, and I feel like a broken record. But there will be a day where I sit here and go, things don't look good, right? But it could be years down the road. Who
good,
knows?
I hope so.
Yeah. Here's the one thing I think I'll leave you with this is here's the last year, the markets did exceptionally well, but they were very heavily run by the technology sector.
Right.
Technology so you had a whole lot of S&P was up a very nice number, but if you took it and unweighted it was still a good number. It just wasn't the same, right? Because it was mostly driven by the technology sector. Here's the interesting thing here over at least the last 3 weeks is now we are seeing a much more broad-based increase in the U.S. stock market. So everybody's playing right now. Okay, it's not all technology. We've seen financials. It's interesting. Some of the technology is still doing real well, but you look at the consumer cyclicals, you look at the technology, you look at the telecom and things like that. Things that have kind of been ignored or neglected here for the last year or two have come alive all of a sudden, which is a good thing. That's what you want. You want a broad-based move up in the markets and the economy. So I take that as another positive. So if we're looking 12 to 18 months out, I'll say it one more time. You stick with the plan. So.
And on that note, we're in good shape time-wise for a change.
Good deal.
I talked to a few of our, loyal listeners, as it were, and they said we're really good at going an extra 5 minutes.
Yes, we are.
So
Wow.
today we're not going to. So, but on that note, stick with the plan, which we did today with
go.
Taking Stock episode number 39. So, Art Jarvis, wishing you and yours a very happy Thanksgiving as we wrap up our recording here on Tuesday, just 2 days before Thanksgiving Day.
Yeah. Happy Thanksgiving to you. Thanks for all you do, and happy Thanksgiving to everyone out there listening.
Well, we ask on Thanksgiving what we're grateful. So I am grateful to have Art Jarvis and Taking Stock every 2 weeks, and we're grateful to have the listeners tuning in and being loyal supporters.
Yep, very much so.
All right. Thank you very much, sir.
All right.
Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.